China-US truce. But who truly benefits? Will India seize the golden opportunity or face a threat? Imagine this: two global superpowers, America and China, locked in a prolonged trade war, shaking the foundations of world markets with heavy tariffs. And then suddenly, they sit across the table. The tariff swords are sheathed, and the world's biggest economic battle comes to a pause. But in this moment of calm, one nation watches silently: India. The real question is, will this ceasefire bring India an opportunity or a threat? Will China's comeback trigger a flood of dumping in Indian markets, or will India emerge as the smartest beneficiary of this deal? Today, we explore this very topic in depth. But before we begin, if you are new to our channel, don't forget to subscribe so you don't miss any of our latest updates. Now, let's dive in. In a joint statement that stunned the world, the US and China announced that for the next 90 days, they will roll back mutual tariffs. During this period, China will levy just 10% duty on US imports, while the US will charge 30% on Chinese goods, down from a staggering 125% and 145%, respectively. This move has calmed global investor anxiety, but for India, it unfolds into a layered story, full of opportunities and challenges. According to market experts, the first positive impact of the US-China truce for India could be relief from Chinese dumping. Senior analyst Kishore Ostwal says that as China regains access to the American market, it will likely reduce the dumping of its cheap goods in India. This will give breathing space to India's domestic industries. Sectors like textiles, steel, and electronics, which were suffering from an influx of low-cost Chinese products, can now regain their strength. Devesh Vakil from HDFC Securities notes that India's economy has consistently demonstrated resilience amid global disruptions. He believes that this temporary tariff ceasefire will not only restore investor confidence but also bring stability to Indian stock markets. Moreover, it may help ease global trade flows in the near future. Anita Rangan, chief economist at 𝐼RS Securities, sees this as a global-level support for inflation control. Earlier, there was widespread fear that the US-China tariff war would further fuel inflation. But now that both sides have stepped back, inflation risks have eased to some extent, benefiting countries like India, which are heavily reliant on the US for services and investment. But perhaps the most intriguing aspect of this development is how the US itself stands to benefit, especially in reducing its trade deficit, which currently hovers around $1.2 trillion. Experts believe that softening import-export relations with China will help the US move closer to trade balance. And this shift may draw America even closer to India, which is fast emerging as a reliable supply chain partner on the global stage. India's role is no longer that of a passive observer. This agreement is expected to influence even the US Federal Reserve's policy decisions. If fears of a US recession begin to fade, the Fed may consider cutting interest rates by Q3 or Q4 of 2025. This would boost capital inflows into developing economies like India, strengthen the Indian rupee, reinforce investor confidence, and give fresh momentum to government initiatives like PLI, Production-Linked Incentive, and Make in India. Now, which sectors in India stand to benefit the most from this shift? Auto parts, semiconductors, electronics, technology, and IT hardware are poised to gain significantly from the global supply chain realignment. As many American companies actively seek alternatives to China, India is appearing on their radar more than ever. If India responds with the right policies at the right time, it could very well become the next global hub for manufacturing and exports in the coming decade. However, amid all this optimism, there's also a note of caution. Indian exporters may soon face increased competition, especially in markets like Southeast Asia Africa, and Latin America, where India had managed to gain ground in recent years due to the US-China tensions. Now, with China being re-embraced by the US, the return of cheap Chinese products could pose a fresh challenge for India. 𝐮𝐸𝐥𝐸𝐿, President of the Federation of Indian Export Organizations, FIEO, warns that India must stay more vigilant than ever. According to him, India needs to engage more actively with the US to strengthen trade agreements. We must position ourselves more firmly as a dependable alternative to China. He further advises Indian companies to safeguard themselves against future uncertainties by investing in local manufacturing through the PLI scheme and the Make in India initiative. 𝐟𝐸𝐿 believes that India should focus on sectors where the US-China trade dynamics have minimal impact, such as pharma API, gems and jewelry, organic chemicals, engineering goods, and IT services. These are areas where India holds a clear competitive edge and can further solidify its position in the global marketplace. Now let's talk about the market's reaction. As soon as the US-China tariff deal was announced, Asian markets surged. Hong Kong rose by 3%, Shanghai by 1%, and Japan and Taiwan also recorded positive gains. In India, both the Sensex and Nifty saw slight improvements, signaling that India's financial system, too, is feeling some relief from this wave of global calm. But this relief could be temporary, because the tariff reduction is only for 90 days. The real question is, what happens after that? Will the US and China clash again? Or is this the beginning of a longer-lasting peace? India must prepare now. What strategy will we deploy if tensions return, and how will we assert our influence if stability prevails? One thing is certain, India has become the silent tiebreaker of global trade. Whether the US wants to stabilize its supply chains or China wants to reroute its exports, both are looking at India. And that makes this both India's greatest opportunity and its ultimate test. India must now make a critical decision. Will it continue to chase investments only when opportunities arise, or will it craft a long-term strategy that lays a solid foundation for sustained investment, job creation, and manufacturing growth? Initiatives like the PLI scheme, free trade agreements, and logistics infrastructure are no longer just policy buzzwords. They are becoming strategic weapons. In summary, the US-China truce is both a relief and a signal for India, a sign that the world's attention is no longer just on two nations, but three. And the third nation, India, can no longer afford to remain silent. It must move swiftly and decisively, because history only remembers those who understand the moment, take action, and lead the world in a new direction.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.